Good evening, this is the speculator at Take Your Profits, and I'm here to do another post-trade review. And this is going to be the post-trade review for trade number 84, which let's get right into the picture to find out what it was. And trade number 84 was a long entry in the Australian dollar US dollar market. If you notice, this was our entry. This was our protective stops. This was my initial profit targets, and these were my secondary profit targets. Answering the first question, going right into the first question here of the post-trade review is, did everything go as planned? Well, going into what was planned, if you could look here, I had a nice little Gartley222 pattern opportunity where price traded exactly at the 886 retracement of the XA impulse leg up. And going into the Pro Trader dashboard, let's look at the exact characteristics of what that trade were. And what we find is that this trade was actually another CTS8. It scored enough points to come up with a combined technical score of 8 points. Those 8 points allowed me to mathematically derive a position size using the spreadsheet, which dictated that I was to take a half a position or 30,000 unit contract on this trade based on the risk profile that it portrayed based on my set strategy, my stops, entries, and targets, which was a 1.69 risk profile in this case, based on the characteristics, which going right into the characteristics of this trade, we can see that it scored points for being at minor structure, it scored points for ratio confirmation, scored points for higher time frame confirmation, scored points for completing an ABCD harmonic pattern with a 618 retracement, and again it scored points for completing a Gartley pattern completion at an 886 retracement of the underlying XA upward trend. This particular trade scored a 36% winning percentage, with about a 1-to-1 win-loss ratio. And historically, this trade, over the extended series of trades that I've taken with similar characteristics, historically this trade has netted about $155 profit and loss, or in this case a profit. So for this particular trade, that's what was planned, was a Gartley222 trade opportunity for trade number 84, which was a long entry. As you can see here, I bought three contracts as per my suggested position size, which is half a position to trade in the Australian US dollar market. It was decided on a 4-hour time frame, trade number 84, which did turn out to be a loss. That was the trade outcome. My protective stops were set at 1.0290 for the initial 2 ATR stop loss. What it is showing me here is that I was actually taken out at approximately just short, you know what, I was taken out just short of the 2 ATR stop loss at 1.0289 for a total loss of about 77 pips on this trade. So let's go into the chart to kind of see why that trade did not go as planned. Going into the chart, we can see how the extension from this AB impulse leg was a 1618, which coincided with the inverse extension of the BC leg, which was a 141.4%. Those two extensions, those two ratio extensions that confirmed each other, also coincided with the retracement of the XA leg, which was an 886 retracement, which is where price did end up trading at. The AB leg retraced to a 618 of the XA leg. The BC retracement leg retraced to a 618 retracement of the AB leg. And this entire ABCD harmonic move completed again at the 886 retracement of the XA. This, when it completed here at this 886 level, it gave me, as you can see from here to here, a very nice risk to potential reward profile. In this case, I set my stops for the half a position at the 1.0290. I was going to play a bounce off the 1.03 level. I did not expect it to go anywhere below that, as I was giving myself a 2 ATR stop loss of about 75 pips or so, just below this recent structure, to protect any losses that I may have incurred. As you can see, when I took the measurement, the retracement measurement off the AD harmonic move, the 382 retracement rested here at the 1.0515 level. I used number rounding, and I brought my initial profit targets about 15-20 pips in advance of that 382 retracement to front run the market, and I placed my initial profit target at 1.0495 to try to get the market to take out my stops a little earlier than the actual measurement to guarantee a winner. The idea was that if price did retrace back to this 382 retracement, I would then move my stops to break even to protect any gains and continue on with a risk-free trading event. If I would have had any significant move in this direction, I would have reduced my risk to about 50% to protect any gains that I may have incurred. However, this trade did not go as planned, even though we did have an oversold sentiment here. We were at an extreme level of selling. The trade did not go as planned as per this particular set strategy. And if you can see, if we open this up a little bit, we can see that from our entry here, price immediately just went against the position and ended up getting stopped out at the 1.0290 level, or just short of that at the 1.289 level, and took me out of this position. This was a properly analyzed Gartley222 trading opportunity, being that it did qualify based off of all of the ratio qualifications I subject every trade to. However, this particular market was just not going to respect this Gartley222 trading opportunity. So the fact that I respected my stops is actually a very good practice in trade management and trade discipline for me. So it did help to protect my stops from any further losses. However, this is another example of TCT trade execution, or a trend continuation trade execution, would have worked out profitably. So this was another opportunity to take a chance at reversing my position once my trade got stopped out, in order to recover any previous losses that I incurred from getting stopped out on the previous trade opportunity. However, it is not something that I did take advantage of, and it is the one item in this most recent series of trades that I do need to improve upon. This is the second question of the post-trade review for trade number 84, in that when I do get stopped out, I do need to take a serious look at identifying and deciding to execute trade orders based on the trend continuation trade model that I do have lined up in my ROE or my rules of engagement. So just a quick recap of this particular trade for this post-trade review for trade number 84 in the Aussie dollar US dollar market. It did not go as planned. This Gartley222 trade opportunity, I was stopped out on protective stops for a loss of about 75 pips or so. I did get taken out on protective stops to protect my capital, and the most important action that I can take on from here on out to improve the probabilities of turning a profit in these particular trades is to identify that once I do get stopped out on these trades, that I do need to execute the trend continuation trade model that I do have within my ROE to go ahead and make back any previous losses that I can incur, because 90% of the time whenever my trades get stopped out, the market does continue to go against my direction. And when I reviewed this trade after the fact, there was an opportunity to make in excess of 70 pips on a variation of the TCT model using the STS model that we're trading in the systems with the system strategy. So again, the best and most logical way to improve is to work on and execute the reversing of my positions when I get stopped out based on the rules of engagement for the TCT trend continuation trade model. Thank you for listening, and good luck, and take your profits. This is the Speculator signing out.